Bitcoin is looking like it wants to push to further highs. The US is working hard to create regulatory clarity for the crypto environment, and businesses and institutions are racing to get into the crypto space. Now, what does this all spell? Let's discuss just that. Now, today we're joined by Laura Inam. I am slaughtering your name, but your last name is very hard. Laura manages growth at Gate.com's exchange. More importantly, she's a principal at Gate Ventures, the venture capital arm of Gate.io. Today, you'll get a chance to learn behind the scenes what she does at Gate's venture capital arm and what her role is there on investing in early stage projects, which connects with what we focus on this channel is investing in early stage projects. Now, there at the venture capital arm, she helps connect those new projects with other founders. As an early stage investor, she's invested in their growth and helping see them do well. So I'm looking forward to asking her what she thinks about when they're making investments, what they then do with these founders, what they see at a bigger level, because essentially she does in many ways what you do, but she does it with more money. And she's been in the crypto space longer than many of you have been. So I'm looking forward for you to get a chance to hear how she looks at projects, what she wants to invest in, and how it's going. Without further ado, help me welcome Laura to the stage. Laura, thank you for joining us.
Hi, happy to be here, and thank you for having me.
Now, for our audience that doesn't know you, how long have you been in crypto, Laura?
So I actually entered crypto accidentally in 2016 when I was still in my college days. I remember I was studying physics and my classmates, being super geeky, were telling me about this magic internet money, Bitcoin. Unfortunately, I was a broke student back then and I couldn't tell my parents, like, sell the house, take a second mortgage, let's go all in crypto. But I bought a little bit of Bitcoin here and there. And I realized it's a very interesting space to be in. And after I graduated university with a science background, I started helping crypto projects with launches. So I did one of the first ICOs back in 2016. And then I realized, hey, this is the space I want to be at. I did a lot of ICOs. I worked with some of the top exchanges and projects back in the day. I founded a marketing agency. As I was working with a lot of projects on go-to-market, I received usually a lot of tokens, and some of these tokens did pretty well, especially back in the day. If we remember, like Waves platform, one of the OG layer ones that was like top 10 project by CoinMarketCap. They did well. I started angel investing, investing in some good projects, made some capital, and then last year I joined Gate, the venture arm of the exchange. So Gate Ventures is the venture arm of Gate.com exchange. We rebranded recently, so some people call us Gate.io. I'm like, no, we're Gate.com already. We invest our own prop capital. We invest out of our balance sheets. We do tickets anywhere from like 100K to a couple of mil per deal, anywhere from pre-C to Series A. We do tokens and equity. And we focus, especially right now, into anything in RWA, DeFi, infrastructure, payments, stable coins, among other industries. And we are interested for projects who are generating revenue and not just planning to have a token that's whole business model. We invest in projects all around the world, founders with different backgrounds. The most important thing is their grit, their resilience, and of course, their experience in the space.
So 9 years in the crypto space, coming out of university, you got right into the thick of it, getting firsthand experience. And really, when I guess projects started raising money outside of, there were a few that came out earlier, but that was the heart of when altcoins and other use cases started to come about for crypto. And so you've been around for much of that. Now, you've been an investor yourself. You're now working at the venture arm. It'll be fascinating to hear more about, I guess, what you learned along that process. But tell us more about your role and work at Gate Ventures right now.
So as principal at Gate Ventures, I have twofold responsibility. So on one hand, I look for interesting projects for us to invest in. So usually I meet founders, I go to conferences, talk to other VCs for potential deal flow, find interesting things for us to look at, talk to founders. If there is something that's worth looking into, I would add my analyst to kind of go deeper into the project. And if we see there is a business case that we can potentially make some good multipliers, we would invest in. Second responsibility is, of course, helping our current portfolios to succeed. And that would be process investment portfolio management. So helping them to do marketing campaigns, helping them to promote their products. For example, if they're launching something, we might host a Twitter space with Gate Ventures and Gate.com to talk about the new developments our portfolio is having. We're hosting a conference, we invite them as speakers, or if they need any sort of introductions in the space, they need some sort of advisory, I would also help them out by connecting. So first, finding interesting projects and then investing into them, and afterwards making sure they succeed in whatever they're building.
Let's talk more about the finding interesting project. So tell us more about that. What do you find interesting?
So when right now we're looking for projects to invest in, first of all, we look into the founders. If we're investing very early stage where there is usually nothing is really done, you might have some sort of MVP, you probably don't have a product, you probably don't have a big community, you're basically looking into the founders. What is their previous experience? If they're building something in a specific narrative, have they done something before there? Was this successful? Have they worked in a company that has done something similar? Because if, for example, you're building a new protocol, we want to see protocol experience. We want you to be maybe employee of another DeFi product that was successful, as you already have some sort of know-how, you have industry experience, you have relationships. So previous experience is very, very important. Even if you had experience and you failed the project, but you learned a lot, that's also a good thing. I mean, crypto is very, very hard industry to succeed, but if you have experience, it's already a good bonus. Number two is we want to understand what kind of industry relationships you're going to have, because in this space, either you have a friend or you buy something. So if you have friends that are influencers, that are journalists, that are working exchanges, we know you'll be able to get a lot of good things for your business success free of charge rather than you paying later. So that's another very important thing, is your network. Number three is, who did you hire? Who is on your team? Again, same thing. Have they built something before? Do they have the experience? Number four is, what you're building, is it novel? Is it interesting? Is it unique? Is it just another, Hyperliquid or another pump.fun, but not on Solana, but let's say on Polygon? Or is it something that's never done before? So we're very much looking for a novelty. So something very different, solving very unique use case that just wasn't thought of for. Number five is, we look at your tokenomics and we look at the investment terms. Because if you're an early stage project with almost nothing to show and you see your valuation is 100 mil, well, we're not going to look into that. So you have to be reasonable with your valuation and your terms. Because right now, as we're filming in end of July, we're kind of entering this altcoin season. We don't know how it's going to be, but probably we'll see a little pump here and there, maybe towards the end of summer, maybe beginning of autumn. So realistically, we have a window of like 3 to 6 months maximum until we're going to reach the top. Again, we don't know what's going to happen in this space, but that's what we're kind of predicting. So if you're giving us terms where we're going to start only getting tokens 1-2 years from now, we need to think, what's going to happen a year from now when we're just going to start getting tokens? Probably the market is not going to be at the top. Probably the market is going to be the bottom. That's kind of the majority consensus. So whatever relation we're getting right now, will we A, get our principal back, and B, show some returns as well? Because one thing that founders fail to understand is that VC investment is not charity. It's not a grant. It's a high-risk loan that you're taking where you're betting your reputation. So yes, if you fail, you don't have to repay it, but you have a stain that, hey, you raised, especially if you raise high number, there is 10, 20, whatever, 100 million, and with that amount, you failed to deliver a business when the money wasn't a problem. That begs the question, how are you building everything? So it's a high-risk loan where you need to promise your investors high returns, because venture business is not 10% a year return business. Venture business is 100x returns. So we look for those unicorns. We look for those exceptional cases. So as a founder, you need to show me how are you gonna be that 100x business? How you are taking, whatever your raise, let's say 1 million, and making that 1 million into 100 million. What is the strategy? How you're planning to get there? Because in then maybe it's better for you to go in a bank and take a simple loan rather than go into VC. And another very important thing when we're looking into is what is the narrative you're building? Because again, in crypto is very much narrative-based industry. And for example, if you're right now building in something in AI, but your product is going to be only shipped 3 years from now, I'm going to ask a question: will 3 years from now, AI is going to be that hot as it is right now? Because yes, right now it's very good, but you don't have a product, you don't have anything. So are you building for today's problems or for tomorrow's? So for example, if you're building something into robotics, that would be very interesting, because that's one of the theses we have, that robotics are going to be a very hot narrative 2-3 years from now, because we don't have enough people. There is huge labor shortages, especially in like factories and for low skilled work, and robots can basically sustain a lot of this work. So this is one of the theses we have. So if you're building robotics for a product you're going to launch 3 years from now, amazing. But if it's another AI agent, well, you're probably too late to the party.
Now, does Gate Ventures only invest in like the early, like pre-sale or seed rounds, or do you ever buy tokens that are on the market from projects as they launched 2 years ago or 3 years ago? Because right now you're probably seeing a lot of companies that are putting together their stuff and they're doing their seed round and stuff, and they want to not give you any tokens for 2 years, which is a time frame that somebody that really knows what's going on in crypto isn't excited about, versus some of the stuff that's already out there. It's been punished by the bear market. The prices are punished. A lot of the vesting has happened. And in my opinion, some of the best deals are out there like that right now.
So yes and no. So we as a venture, and we invest in OTCs, but we usually look for top 50. So look for large caps, basically blue chips. As those survive the market, we know they're generating, a lot of them are generating revenue, they're profitable, their business is going to be here for 10, probably. If the industry is going to be here, those businesses are going to be here. Let's take a look at like Solana, for example, like, or BNB, or we look at XRP. You know that probably like it's high chance that, of course, you never know what's going to happen, but there's a high chance that Solana is going to be here 5 years from now, maybe even 10 years from now, if the crypto industry is not going to be banned one day, or XRP. So with those legacy business, yes, we sometimes look into that. Whereas if we're thinking about like a small cap, anything that is below 50 mil FDV, usually no. Because if the founders launched recently, especially if they launched around beginning of the year where the market was pretty good, and they didn't succeed, having probably raised good amount of money, then it begs the question, what was the issue? Why your product wasn't accepted? You had the money, the market was good. Why you weren't successful? Why do you need to raise again? And what is that you're doing with your business that you're not generating enough revenue as the business itself, and you need to sell the token to get additional capital? Is that token sale for your business longevity, or is it because the founder wants to cash out, which is again usually not a good thing? Because the biggest issue that we see in the space, founders are used to having token as their whole business model. They would say, hey, we have a token, we're going to pump it, that's going to be the business model. And we're like, what about the actual product? You're building, let's say, an exchange. So what about the actual exchange? How you're going to get a users? Or you are building, let's say, again, a DeFi protocol. You're building a bridge. How are you going to get traction? Because in the end, if you're building a bridge, you need to make money from transactions. You need to make money from swap, from going cross-chain. Like, what's your strategy there? And if you don't have a strategy there and you're failing to attract users for, let's say, a year, 2 years, what's going to change? If you haven't been successful for 2 years, you tested, you had chances, you had the money, the market wasn't that bad, especially there were some really good kind of piece of time just to launch and to do big market campaigns. You have to be really good at convincing us that now you have something. So either you pivot it, like by a lot, or you're just trying to cash out on the investors that don't understand the market. So I would be very, very, very cautious of investing in low caps. Like right now, again, what I'm saying is not investment advice. You might lose money. Crypto is very, very volatile. And what I'm saying is my own personal opinion, not a reflection of my employer. But you need to be very careful investing in any kind of low caps, because there is a reason why there are low caps, why they got there. If they didn't have a successful launch, why they didn't have a successful launch? They did launch at a bad time. The question is, why did they launch in a bad time? Why they couldn't wait? And if they launched in a good time, why the launch wasn't so successful? And then you also need to look at the chart. If the chart is 3 green graphs and then everything is going down, basically you see a plateau of a beautiful wave going down, again, what did they plan? Was there really a token utility? Another, and I can go here deeper, you can ask me follow-up questions, but again, if I look at the chart and I see this one nice green wave that's going down, there's a very, very big plateau, I know the token is not needed. Because realistically, if you think that there is some sort of product that needs a token, you should see the chart going up and down, up and down. There's a bit more demand on bought, on sold. Like there's action. Whereas if you see there's no action with a token, it means the token is not needed. So why then you did a product that has a token that's not really needed? Probably because it was easy to fundraise. You could easier get investors' money, and you could later cash out as a founder. And that's not the right way to do business in this space. And we're not going to be backing that.
Yeah. Okay. Well, some good insights on your end. Now, my personal feelings, a lot of what I invest in is those tokens that are punished. They are higher risk. And a lot of times, what people don't realize, when you're buying a crypto token, you're buying something intangible. In many ways, it's not near as good as equity in a company. It's far more risky, but because it's far more risky, it's far more volatile. And volatile can be a terrible thing, and it can be an amazing thing. Because like you said it perfectly, Laura, that a lot of crypto tokens aren't needed, and that's a terrible thing. It can also be a good thing, but only if your timing is good. Good from the standpoint of in investment, we make money by buying low and selling high. So if the token is not very needed, but say the use case is going to be developed later, the token might be very punished during the bear market. Because, for example, Bitcoin's been going up for a while, so we can say we're in a bull market, but the altcoins, most of the altcoins haven't felt that yet. And so altcoins can be particularly punished. And a lot of what I buy is tokens that are 2 to 6 years old, or projects that are 2 to 6 years old. We have a track record on the founders. Did they just take their initial money that they raised of 30 or 40 million, buy Ferraris and Lamborghinis, and then fold during the bear market? Or did they use that money to build something amazing? And oftentimes when we're in this stage, their token is punished very bad, just because token investing, as you know, you probably looked at thousands of white papers in tokenomics. Their token investing, a lot of that is vested, combined with the bear market, has punished the price. And I like that juicy little spot, but it probably is not a spot that Gate Ventures would dabble in, because they would see it as very risky. As well as with Gate Ventures, you guys have access to premium early stage projects. Probably a lot of them are knocking on your door saying, Laura, hey, can we have some of your time? Can we show you what we're doing? Now, is that how you get a lot of your early stage projects that Gate Ventures is investing in? Is that they come knocking at your door essentially saying, hey, can you look at our stuff?
So I'll answer this question in a second, but there's one point you mentioned earlier that I want to kind of talk a little bit more about. Bitcoin is pumping and alts are not. And why in previous seasons we had a very clear alt season, like, I don't know, whatever Bitcoin did, all the alts would do, 5x, 10x more, because there was a lot of liquidity and there were very little projects. Whereas right now we have thousands of projects launching almost every week. There's too many projects, and liquidity is too scarce and scared around and too thin for it to pump significantly to see that altcoin season. We need significant liquidity coming in from usually Web2 with a lot of money just like pouring in. And that's why we don't see it, because there's too many tokens, they're just scattered around. If we would slash all the altcoins, not into even like half, let's say it would have like 30%, 20%, we would probably had already altcoin season because liquidity was there. Every month we have billions of dollars coming in this space, but they're just going to scatter around. So that's why we don't have altcoin season. I hope we're gonna have it. I saw some rumors that Trump wants to do another stimulus for a lot of low income people. So if that's gonna happen, probably gonna be a very big push first into regular stock market and then into crypto market. Now, answering your question, so even though we have so many interesting projects, and yes, we already have the name, we've been in the space many years, in the end, even as VCs, we need to fight for the best allocations. Because even though we have thousands of projects that are being built and launched every week, there are not a lot of really good ones with experience, with track record, with previous success. And in the end, the best projects they're probably, we live in this very dystopian times right now when there is a lot of projects, there are a lot of retail who wants to invest, they don't know where, they kind of invest here and there. And there are a lot of institutions, very, very rich, high net worth individuals who also want to invest in crypto. But the problem is they don't know where to invest because we don't see good founders. We see founders that don't have crypto experience, they have little crypto experience. They see these headlines of projects raising at hundreds of millions of dollars valuation or $1 billion valuations. They increase their valuation, but I have nothing to show for. So in the end, on every day, I have at least 2 to 3 calls with other VCs in this space. I always try to kind of be on top of the industry by talking with other kind of colleagues in the space. And we all say the same thing. We have the dry powder to invest. We are lacking founders. We are lacking people with grit, with resilience, with experience, with healthy outlook of what it's like to build in the space. And those couple of projects we see, they get swept around. So it's not like, even though, yes, there are a lot of founders who come to us, they knock on our door like, hey, Laura, can you check? In the end, I try to hunt for best founders. I try to hunt for those people, for those entrepreneurs who build something, who exited, who are leaving top companies to build their own things. And I'm trying to get on their cap table, because in the end, if you're raising a round of, let's say, early stage round of like a couple of million, let's say 5 million, you will probably have 20, 30 million of potential buy interest from a lot of VCs if you're a seasoned entrepreneur. I see a lot of really good rounds and being oversubscribed 2x, 3x, and sometimes even you get your allocations reduced. So if founders think that VC job is always super easy, oh, we just sit here, we go to fancy lunches, we talk to some projects, and it's like, oh, maybe I'll invest here. You or not. Actually, it's the other way around. We take good founders to luncheons and be like, can we be in your cap table? We would love to give you money. Would you be so kind to take it? And that sounds, sometimes even unreal, but that's where we are right now. There are not a lot of good founders, and we can go why it is, but like realistically, people don't want to work and people don't want to put in effort. And when I hear the stories, not even in the crypto space, in like a general, say talking to other people, like I'm in my 30s, so I talk with people let's say in like late 20s, and they're like, oh, there is no good job. Oh, I can't find a job. And no one is hiring me, or I'm building my product, I cannot raise. I'm like, you're probably doing something wrong, because there are so many companies that are struggling to hire good people and they're to pay good salaries, like give amazing packages. There are a lot of VCs who are ready to give you money, help you out. But the issue is, I talk to these founders, they're not putting in the effort. Like I'll give you one tangible example, because I talk very much on a high level. And again, I'm happy to go deeper in any of these topics. I talk to founders and they come to pitch to me. They start telling about their product and they start asking questions or start giving them feedback. Because again, I go through around 100 pitches per week, and they get offended, or they start arguing with me, or they start saying, no, you don't understand. And I'm like, you came to me. I talk to found, like, that's literally my job, to understand the space and find projects that are good. And if I'm asking you about why your go-to market is like split this way, I have been in the space in 10 years. I've done go-to markets for more than 200, 300 projects myself before going. That's why I'm now in the venture, because I helped 300 projects launch. I probably know how to do a launch or two. Maybe, with 300 projects, close to maybe. And you don't want to listen to your feedback. And I talk with other VCs, and the same problem. You talk to founders, they don't want to listen, they don't want to learn, and they're not hustling. I had founders who I talked to who were okay, and they'd be like, okay, amazing, I love what you're doing. Can you prepare me XYZ information and send me over? Sometimes those founders take a week to send me that. You're fundraising. You're asking me to invest hundreds of thousands of dollars into your project, and you take a week to send me something that takes you probably like an hour to do. What does it say about you? I'm not your priority. You're so busy. Probably not. What's your attitude into that? Like, if I would be raising capital right now from someone, if they would ask something, I would send the same day. I would sit at night, get it done, so that he would see it in the morning. And that's the attitude I expect from someone. Again, the money is there, the advice is there, the mentorship is there. You just need put in your work, put your head down, and just hustle and lock in. And that's what this industry is lacking.
So fair to say, if I were to summarize what you're really, really looking for in those projects, number one, solid founders with experience. They've got some kind of experience in the space. There's some reason why you believe they know what they're doing. Second of all, like you said, novelty, or like a narrative that they have to be in a narrative that makes sense with timing that makes sense. Would you say that those two things primarily characterize what you're looking for?
100%.
Yeah, it makes sense. I mean, that's what investing is for, a lot of the audience has backgrounds anywhere from 1 to 5 years in the crypto space. Some have prior investing experience, but at the end of the day, you're sorting and sifting. You're looking for those undervalued gems. And why are they undervalued? Maybe their price is way down because they're appropriately valued, or maybe their price is way down, or some reason you're getting in a stage that where there's particular value. But a lot of determining if there's more value there than what you're paying for is the team good? Because at the end of the day, some, as you've probably seen, Laura, some of the teams, they launch a project, they get all this money, and they think like that's their money. They're now rich, and they go buy nice cars and everything, and they give up as soon as it gets hard because they never were committed to begin with. So what Laura's describing is she's looking for those founders that are committed. Like when she asks them, hey, can you get back to me on this? And they turn around and give her something. A couple hours later, she's like, okay, they said they were going to get it to me fast. They did get it to me fast. And then watching their behavior and how focused they are tells you, okay, is this somebody I really can trust? Giving hundreds of thousands of dollars, in some cases millions of dollars, that they're going to, I guess, be like a pit bull on it with what they're trying to make happen, or they're just going to, just kind of lackadaisically come in here, try to raise some money and try to make something happen.
One more thing I'm going to add about this is there was a founder that I was thinking with recently. They were raising for a quite good project. I'm not going to name who it is, but it was a good project. They were raising a little bit later stage. We were actually really thinking about that particular project because, again, the numbers are there, everything was there, it makes sense. And then I go to LinkedIn. I become friends with the founder on LinkedIn. And I start seeing his content. He's posting pictures from a private jet, numerous pictures. And then I have this question. You have a product. You're raising for a product. It means you're lacking money, but you're spending tens of thousands of dollars or hundreds of thousands of dollars for private. And then you come to me and you're raising. So where I will be investing your money? I'll be investing into the actual product, into hiring people, or you flying comfortably. And if you're at that level of wealth where you can afford flying private, My question is why you're raising. If you're so like, if you're a founder who believes in your project so well, you should be greedy. You shouldn't want to give away equity left and right. You should be like, oh my God, my project is going to be $1 billion business. I want to have all of it. Like it's a good greed to have. I'm not going to go and raise. And same thing happening. I see founders raise capital, and then next, and I see them having table services during major conference in the clubs. I pay attention to these things. I see them spending money buying fancy cars. If you're an early stage founder and you're buying a fancy car, with all the respect, where is the money? From our own pockets. If and like they post on social media phone, like we do this due diligence. We literally do a due diligence of their personal Instagram accounts. Would ask around PayPal. Like we will know these things. We'll know where you'll be spending money. Guys, again, if you're raising at the early stage where you haven't made it, you shouldn't be spending money on these luxuries. Make it. I mean, if it's your own money, you made it. Do whatever you want. If you want to buy a private jet, buy a private jet. You do whatever if it's your money. But when you're spending your investment money on this, that raises the questions.
Yeah, and that's the reason why a lot of projects run out of money before they make it, is just they're spending money on things that they should not be spending money on. I recently had a conversation with this project I've invested in for the last couple of years, and they were talking about meeting with one of their investors. And their investor had initially given them 500,000, later came back with $1 million, later said, we'll give you whatever you want. And this investor described the problem they often have with crypto projects. They come in, they'll give them $1 million or $2 million, and all of a sudden all their executives are driving new sports cars. And they're like, what the hell? Like that, like you said, Laura, that money was to be spent on hiring new people to build out what it is they're trying to do, or even just for paying for the office and other expenses, not to be spent like that's some kind of earning, like some kind of gains you've actually made.
100%. And we pay attention to these things, and we passed on a couple of deals because of these particular. Like the deal seemed solid. We like the product, we like the team, we like everything. But when I saw this, I'm like, yeah, let's pull the plug. We're not putting money there.
Yeah. Now I have a question for you, and whatever your answer is just out of curiosity. So in the past, since Bitcoin's inception, there's a certain trajectory that Bitcoin tends to follow in, and that trajectory would put its high point at somewhere between 155 to 185,000 this cycle, unless there's so much traction it breaks through that, and then we would then consider it a super cycle. Do you think with the institutional dollars, do you think with the US paving the way for more money to come into crypto, that Bitcoin perhaps breaks above that and we have this time a super cycle? Or is it just, I mean, they said in 2021 it was going to be a super cycle and it wasn't. They said in 2017 it was going to be a super cycle and it wasn't. What's your speculation?
I would say we can sit down here, we can speculate, we can bring, Harvard educated PhDs to speculate about it. But in the end, it very much depends on what US economy will do. Because the US economy is like the biggest driving factor right now of Bitcoin. So if Trump tomorrow comes in and will be like, hey, we accept Bitcoin everywhere, we not just regulate it, we encourage it, he'll do some sort of like another stimulus bills, or he would do any other legislation or anything to make Bitcoin even more accessible, there's going to be a huge rally. Or if, for example, we'll see that the European Union also say, okay, we love Bitcoin, it's amazing, we make it part of our government in any shape, way, or form, it will be. So in the end, politicians are the ones who are making kind of majority of decisions that have impact on the price. Institutions, yes, BlackRock came, all the biggest bank came, they increased the price a little bit. Yeah, we have 17,000 today, if I'm not mistaken. 100. Let me check. We have 117,000, which is good, but it didn't have that huge of an effect. We had Ethereum ETFs when they started. Did we have a huge price increase on Ethereum? Not really. Only right now we're seeing Ethereum kind of going close to 4,000 as we're speaking end of July. I have no idea what's going to happen. No one knows because U.S. economy is so unpredictable, and we don't know what the president is gonna basically announce, and based on that, the industry will go. So we can speculate, we can, look at the charts, we can see where's the higher highs, lower lows. Like in the end, if tomorrow there's going to be a huge stimulus bill and everyone's getting extra money and basically for free of charge, or Powell says, okay, we're cutting interest rates, or Trump makes him basically quit his job and fires him, even though he can't really do that. But if by whatever executive order he manages to do that, and it gets someone else there who's going to cut interest rates by a lot, we're going to have a super cycle. But then it's all in their hands.
Another question, follow up to that, is there's different narratives within the crypto space. What are some of your favorite narratives to invest in? By narratives, there's like blockchain, gaming, AI. There's layer ones, there's layer two, like ETH scaling solutions, or maybe there'll be layer two Solana scaling solutions. Who knows? What are some of your favorite narratives in the crypto space for early stage investment?
So right now I'm looking mostly into stablecoins and anything that is adjacent to stablecoins, because we understand that crypto is going to be part of our everyday. It's becoming mainstream, and the stablecoin use is increasing, and it's finally not correlating to the whole crypto industry. So like stablecoins are just like part of our everyday. So anything with payments, anything on ramping, off ramping, anything that can bring Web2 to Web3 is very interesting for me. That's number one. Number two, anything with robotics. Because there's a huge shortage of labor, and that shortage is gonna just increase. There's a lot of low-skilled work that is just not attractive for anyone to work. And if you can make robots that are gonna do all of that and they can work 24/7 without any kind of breaks, that's incredible productivity. So that's definitely another interesting narrative. Number three, I'm very interested in decentralized science, as I have science background. So for example, right now we have a very big problem that if you want to do any kind of drug discovery, it takes 10 years. It takes sometimes billions of dollars. Whereas if we can use, first of all, AI to make this discovery faster and quicker, get through at least first phase of all the trials faster, that already reduces the cost. Plus, when it comes to a lot of research that needs to be peer reviewed, that needs to be verified, again, we're just lacking manpower. If we can use AI plus crypto, especially when it comes to verification of payments, of incentivization, I think there is a lot of interesting things to be done there. So DeSci, robotics, and stablecoins are kind of three narratives I personally look into the most.
Interesting perspective. Do you have any favorites of existing projects that are already out there in the decentralized science narrative?
I'm not gonna be naming names what I'm investing in myself, but there is definitely some really good projects. And again, not a financial advice. If you lose your money, don't come blaming me. It's on you. But I highly recommend to look into that space. Right now, I'm looking very much into projects that are coming out of top universities, out of Ivy League universities, as well as UK universities, because there are a lot of interesting stuff there.
Yeah, I like that avenue. Right now, there's a lot of politics involved in science. There shouldn't be any politics in science. It should just be science. And I think the blockchain will really help facilitate that, so that things can be verified. And so that the truth is what we're looking for in science is just the truth of what works and what's replicatable. So I'm excited about that narrative as well.
Not the case. So that's why we need a lot of transparency.
Yeah, great. Laura, I'm glad you joined us today. I'm sure my audience is. Just your experience in early stage investing is helpful. A lot of my audience, that's what they're learning to become, is solid, savage investors. And some of that just comes from experience, both their own learning curve, but as well as leveraging off of others that have been in the space and wanted to learn. If I were to summarize it, really the team is the most important thing. Secondly, like what it is that they're doing, is it novel? Is it useful? But the team is everything. Would you say that's correct?
100%. And one more piece of advice I could give as you're summarizing this is, when you're researching anything online, when you're looking or to invest, is certain project good? Is a certain narrative good? You need to always ask yourself one question. When you find this information, where it's coming from, who is communicating that, and why they're communicating that. That's the most important thing. There's a lot of misinformation, especially on crypto Twitter, because there's a lot of information is being basically paid to play. Means whoever is releasing it is getting paid, and unfortunately, they're not necessarily verifying everything. They're not fact checking what they're communicating. So you need to make sure that you need to check where you're getting this information, who is telling it, and why they're telling that. And for example, right now, I represent a venture fund. I'm not selling you anything. If I'm telling you something, it's my personal opinion. You can agree with it, you can disagree. It's your own thing. But I'm not trying to sell you anything. If I talk about something, for example, I'm saying, hey, DeSci is going to be good. If you go and now buy some token in DeSci, I'm not benefiting out of it. But if there is, especially influencers, if there are journalists who talk about specific projects, you need to ask yourself, do they hold these projects? Do they benefit? Do they get paid by this project to talk about it? That's why I'm always very hesitant to talk about specific names, because I don't want to be in a situation where I'm being associated with something that either goes up, which is good, but then what if it goes down? And then I was the one promoting it. I'm very careful about these things, but there are a lot of people who are super easy to name names. And then you have to ask yourself why they're named it. Do they really want to help you out? Or are you their exit liquidity? And you need to be very, very, very careful about it. And you need to use a lot of common sense to verify everything. Because when I'm in the space for 10 years and I scroll Twitter, every time I scroll Twitter, I find at least a couple of misfacts, like lies by influencers, by even media outlets, because a lot of these media outlets are usually run by 1-2 people who don't even have time. They might use AI to create this content. They might not fact check it, and AI makes so many mistakes. So you need to be very, very, very careful who you're trusting and why you're trusting them as well.
Yeah, exactly. A lot of it is pay to play. A lot of it is paid articles. A lot of it is paid Twitter influencers to shill certain projects. So great point, Laura. Thank you.